Hi friends, welcome to Market Rocket. In this video, I'm going to explain the basic difference between swing trading and positional trading. And I'm also going to be explaining this with the help of a strategy. So if you stay through the end of this video, you will be able to understand the difference between swing trading and positional trading, and also you will be able to take away a strategy with you. So stick to the video, watch it till the end. It will be very useful for you. By the way, friends, before we get started, I wanted to quickly remind you to subscribe to my channel. This is my channel here, it's called Market Rocket, and I make videos about business, finance, and stock market. I make videos about technical analysis and fundamental analysis of the stock market. So if you are a trader, this channel would be very useful for you. So please do consider subscribing to my channel. Now let's get started with the video today. So friends, as we all know, stocks moves in trends, and every trend creates a wave. So each wave, the distance between the lowest point of a wave and the highest point of a wave is called a swing. So it's actually called a swing low and a swing high. So the distance between one low and one high in one move is called a swing. So for example, from here to here is one swing, and from the resistance to the lowest point is another swing, and from the support to the next resistance is another swing, and again back to the support is another swing. So if we keep a line chart, we should be able to see this a little bit more clearly. So what we're saying here is every movement, every wave from the trough to the crest is actually one swing. So from here to here is one swing, and from here to here is one swing. So basically, this is the definition of a swing. It's the distance between the lowest point and the highest point of a move. So swing trading is basically capturing one swing of any move. So if you are able to capture this move, if you're able to buy the stock over here and sell it over here, then you have successfully completed one swing trade. Okay, so this is the basic definition of swing trading. So friends, I want to explain the differences between swing trading and positional trading with the help of this chart over here. So I also have a strategy loaded in this chart, and the strategy contains one moving average and two indicators. The indicators I'm using here are RSI and MACD, and the moving average that I have over here is a 10-day moving average, the simple moving average. And basically the strategy works this way. You have to wait for the MACD crossover to happen from the bottom, and you will have to wait for the price to leave the 40, this oversold zone of RSI. And so crossover in MACD, RSI above 40, or it should leave the oversold zone, and the price should come above the 10-day moving average. Now this is the strategy for the buy for the stock, for a swing trade. So let's say you're watching this over here. It's just about to leave the oversold zone. People are getting tired of selling it. So you can see this RSI is coming out, and the crossover has also happened. So somewhere around here on this day, you place a buy order. So it's at 151. Now you will have to place a stop loss order at the swing low. The low is over here, and the price is moving upwards. So you place a stop loss order over here at 145. Okay, so you buy it at 151 or 152. So what happens after that is you will have to fix a target. So where is the next resistance for this stock? So the next resistance is basically over here. Over here there's a resistance over here. So 162. Right now you're buying it at 151, and 162 is like 12 rupees or 10 rupees movement. Okay, but your stop loss is at 145, which is about 5 rupees. So 145, 5 rupees stop loss, target is about 10 rupees. So it gives you a 1:2 risk to reward ratio, right? So this is a good trade. You should get into it. So you know so you set your target over here at 162, and you buy it over here. What happens is, as the price goes higher, your target gets hit. Okay, Now you can also wait for the price to reach until this point. So above 150, 162 is your target. So when the price reaches 171, you can exit it because the next day it started to fall. So you have already captured one swing. So you will exit it over here. Okay, where the resistance is. The resistance was over here, and since the price moved higher, you waited, and when the next day the price started to fall, you will exit it out at 166. Okay, so you have captured successfully one swing. Okay, so you entered at 151 and you exited at 166. So you made about 15 rupees of 15 points profit multiplied by the number of shares that you bought. Okay, now this is the very simple explanation for what a swing trader does. Now, if you are a positional trader, what you will do is your stop loss is over here, right? Your stop loss is at 145. Now, your resistance was at 169, but it took support at 163, right? Now, you will still not exit the stock. Positional traders will still not exit the stock. Now, once this price starts to go beyond this resistance, they will still the next target will be over here, 192. So instead of keeping, once it hits this 192 resistance, they will move their stop loss from 145 to 163 and wait for it to move higher. So this way they will try to capture the entire RSI move. You see this above 60, the overbought zone, they will try to capture the entire move until say 260, 200 points, 200 points. So the basic difference between a swing trader and a positional trader is that a positional trader will try to capture all the swings. So from here to here was one swing, and from it took support over here at 162, and then it went higher to 192, and that is the second swing. From 192 again it took support over here at 186, and then it went higher. It went as high as 211. So, it at every point you notice that 195 took support, at 203 it took support, again at 225 it took support. So this way, a positional trader will try to capture all the swings in one movement, and a swing trader tries to capture just one movement. This is the basic difference between a swing trader and a positional trader. One more major difference between a swing trader and a positional trader is that a swing trader holds his stock for not more than 1 week or 1.5 weeks. So, for example, if you look over here, this is about 6 days or 7 days of movement, which is about 1 week. So, your trade would have ended in 7 days if you were a swing trader. But if you were a positional trader, you will have to hold on for more than a month or probably even 2 months until all the swings are covered. So friends, that's about it friends. That's all I wanted to explain about swing trading, the difference between swing trading and positional trading. So we have come to the end of this video, and before we go, I want to quickly remind you to subscribe to my channel, and if you like this video, please hit the thumbs up and let me know that you like this video. Also, if you think this video is valuable, please do share it with your friends, and let people know that there's a channel like this that exists, and that I'm into teaching technical analysis and fundamental analysis, and I hope this will be very helpful for you and valuable for you. That's about it friends. Thank you so much for watching. I will see you soon with another video which is absolutely valuable for you. Thank you so much. Bye bye. Have a great day.